From Bill Gates to Charlie Munger, many investors have spoken out against Bitcoin and other cryptocurrencies. But no one has been more skeptical than Warren Buffett.
In terms of cryptocurrencies, I can say almost with certainty that they will come to a bad ending.
If you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because what would I do with it?
It's ingenious, and blockchain is important, but Bitcoin has no unique value at all. It doesn't produce it. I think what's going on definitely will come to a bad ending. It's a delusion, basically.
So why doesn't the world's most successful investor back crypto? Cryptocurrency has become an increasingly popular investment choice over the past few years, yet one of the world's most successful investors, Warren Buffett, remains skeptical. In this video, we discuss why Warren Buffett doesn't believe in investing in Bitcoin or other cryptocurrencies, what risks are involved, and whether it's wise to take his advice. We'll also share some tips for beginner crypto investors, so let's get started. Bitcoin is the world's first decentralized digital currency that enables instant payments to anyone, anywhere in the world, created in 2009 by an individual or group of individuals using the pseudonym Satoshi Nakamoto. It is a form of cryptocurrency that allows users to transfer money peer-to-peer without using banks or other traditional financial institutions. Cryptocurrency is an emerging asset class and decentralized digital currency based on blockchain technology. It is based on a peer-to-peer network and operates without the need for a central authority. Transactions are verified by network nodes through cryptography and recorded in a publicly distributed ledger called a blockchain. Bitcoin and other cryptocurrencies have grown in popularity over the last decade due to their potential for high returns, but they remain controversial investments due to their volatility and lack of regulation. It has a limited supply, and it can be used to purchase goods and services online, or it can be converted into fiat currency and withdrawn from an ATM. It can also be traded on various cryptocurrency exchanges for other digital or fiat currencies. However, it's also criticized for its high energy consumption and association with illegal activities. Despite the criticisms, Bitcoin has seen significant growth in popularity and value, and many believe that it has the potential to disrupt traditional financial systems. Buffett has been very explicit about his skepticism of cryptocurrencies, citing their speculative nature and lack of intrinsic value as reasons he would not invest in them. He feels that cryptocurrencies are more likely to be utilized for illegal activities than for legal ones, emphasizing the anonymity of many cryptocurrencies as a primary concern. Additionally, he thinks that the underlying technology of cryptocurrencies is too unreliable to be a viable long-term investment option. Buffett has acknowledged the potential of blockchain technology and its power to disrupt several industries, despite his negative opinions on cryptocurrencies. Ultimately, he believes that cryptocurrency investments should be done with extreme caution and only by people who fully comprehend the risks and rewards associated with them. Warren Buffett said that Bitcoin is probably rat poison squared in 2018 at the Berkshire Hathaway annual shareholders meeting. This comment was made in response to Bitcoin's meteoric rise over the past few years and its status as an increasingly popular asset for investors. In fact, back in 2014, Warren Buffett already stated, "Stay away from it, it's a mirage, basically." He continued by saying that he believed it was a speculative bubble and that those who bought into it were not investing, they're speculating. He also compared it to gold, claiming that both were a means of money, a very slow way of doing it. Despite its rising popularity, Warren Buffett believes that investing in such assets is ultimately a gamble that could result in high losses rather than profits. As he put it, "You can do things like gambling at casinos or buy lottery tickets, but I would never think those are wise investments." In the end, Warren Buffett maintains an unfavorable view of Bitcoin and other cryptocurrencies, and he has no intention of investing in them. Charlie Munger, an American billionaire investor, is the vice chairman of Berkshire Hathaway and former real estate attorney. He is even more vocal about his negative views on cryptocurrency than Warren Buffett. He has referred to Bitcoin and other cryptos as rat poison and a combination of fraud and delusion. In 2018, he called Bitcoin worthless artificial gold, and more recently he said that investing in cryptocurrencies was just dementia. He has also warned investors not to get involved in the crypto market, saying that it could lead to permanent loss of capital. It is clear that Munger does not believe in the potential of cryptocurrency as an investment or a store of value. Instead, he believes that it is only good for criminals and kidnappers. Martin Armstrong, an American economist and financial analyst, developed the economic confidence model to predict economic cycles using historical data. He believes Bitcoin is a trading vehicle, not a store of value. He thinks it fluctuates with the business cycle like any other asset. He also said the hype about Bitcoin being a world reserve currency was unrealistic. He emphasizes that it is just suitable for trading, not a store of value. Armstrong warns investors that Bitcoin's value can fluctuate quickly. Its chaotic character makes it hard to forecast, and he warns against investing in it as a safe long-term option as its chaotic nature makes it difficult to predict its future movements. The main risk associated with investing in Bitcoin and cryptocurrency is the high level of volatility. Due to its inherent lack of regulation and government oversight, prices can fluctuate wildly from one day to the next. Additionally, many of the exchanges that facilitate trading are not insured or regulated by any government agency, meaning that if something were to go wrong, investors could be left without recourse. Furthermore, there have been multiple cases of fraud and theft associated with cryptocurrencies, making it even more important for investors to exercise caution when considering them as an investment opportunity. Lastly, due to the decentralized nature of cryptocurrency transactions, tracking down criminals who may have stolen funds is often impossible. These risks should all be taken into consideration before investing in Bitcoin or other cryptocurrencies. Warren Buffett believes that cryptocurrency is a bad investment because it does not produce anything tangible, and its value depends entirely on the enthusiasm of the next buyer. At Berkshire Hathaway's annual shareholders meeting, Buffett said, "If you said for a 1% interest in all the farmland in the United States, pay our group $25 billion, I'll write you a check this afternoon," Buffett said. "For $25 billion, I now own 1% of the farmland. If you offer me 1% of all the apartment houses in the country and you want another $25 billion, I'll write you a check. It's very simple." Now, if you told me you own all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because what would I do with it? I'd have to sell it back to you one way or another. It isn't going to do anything. The apartments are going to produce rent and the farms are going to produce food. Instead, he believes that long-term investments with good returns are much smarter than investing in something as volatile and unpredictable as crypto. In the end, he also said, assets to have value have to deliver something to somebody, and there's only one currency that's accepted. You can come up with all kinds of things. We can put up Berkshire coins, but in the end, this is money, he said, holding up a $20 bill. And there's no reason in the world why the United States government is going to let Berkshire money replace theirs. Ultimately, he believes that if you want to be a successful investor, it's best to avoid cryptocurrency. Investors should be wary of investing in Bitcoin and cryptocurrency due to its highly volatile nature, lack of regulation, and potential for fraud. The value of cryptocurrencies can fluctuate wildly on a daily basis, making it difficult to make long-term predictions or investments with any level of assurance. Furthermore, there is no way to protect investors from the risks associated with this type of asset class, as cryptocurrencies are not regulated by governments or central banks. Finally, the use of digital wallets and payment systems has made cryptocurrency an attractive target for criminals and hackers looking to steal money. Investors must also consider other factors such as storage costs, taxation rules, and liquidity when considering any kind of cryptocurrency investment. With all these risks involved, investors should exercise caution when considering investing in Bitcoin and other cryptocurrencies. For beginner crypto investors, it is important to remember that regardless of the opinions of experienced investors like Warren Buffett, Charlie Munger, and Bill Gates, or any of the investment advisors, investing in cryptocurrencies should be done with caution. Do your own research and make sure that you understand what you're getting into before investing. Listen to advice from experts, but always have a good understanding of the market before diving in head first. Never invest more than you can afford to lose, and never forget the risk involved in cryptocurrency investments. They can be highly volatile assets and their prices can swing wildly. With proper education, research, and caution, however, the crypto investment may still present opportunities for growth. What are your views on investing in Bitcoin? Let us know in the comments below. Do consider liking and subscribing to get notified when we post new content. See you in the next video.